So there does seem to be a widening gap, or a big gap between what the Europe is doing and what the US are doing. Europe seems to be more focused, like the UK, on giving money back to, or helping firms and keeping jobs. The US is on this like cash handout to households. What's the thinking? What works best?
So we have to remember that the starting point for the two systems is very different, and that the social safety net in Europe is a much better social safety net that will support people. In the U.S., it's necessary to be both supportive of people and supportive of firms. We look at the package, there is $300 billion out of the fiscal package that is directed towards non-corporate types of firms, ones that are credit-oriented, ones that have very little, maybe 1 month worth of a cash buffer. And so to keep those firms going is critical because, of course, they also employ half the workforce. So you need to have those firms supported. $300 billion in the fiscal package is designed to do that. And there's an additional package that the Federal Reserve has for direct lending. So it's not that we're not taking account of those that 50%. I wish there was a little bit more. I wish that there was a better strategy to get money to the small business and to their workers, because I'm concerned that the timing, that this isn't going to come in time. As I say, those firms have at most a month cash buffer. We're already, for a lot of those companies, we're already 2 weeks into this. They were already required to close as part of the achieving social distancing in the cities. And so, you've already run through an awful lot of that cash buffer. And there was, if you didn't know that you were going to be able to go to your bank and get an extension of credit to have forbearance on your rent, if you didn't know that, you would have already closed your doors. So that is a big concern. And I think we already see that, of course, the consequences of that in the jobless claim. So it's really important to move fast on this, for the 50% of the economy that does not have a corporate label on it. The part in Europe that I'm worried about,
Catherine Mann, economists...
The lack of coordination in Europe is what I worry about.
Do you think we'll see more coordination? Are we ever going to see, the Corona bonds that seem to have been rejected yesterday?
Well, there's always been a search for finding a strategy to achieve a coordinated strategy, a supranational bond within Europe. I had thought before the coronavirus hit that the strategy would be to have issue of green bonds to support investments in climate change. And I thought that would be an avenue through which we might get some coordinated bond issuance in Europe. I do think that there is I think it's really important for Europe to have a coordinated strategy, whether it's the national governments agreeing to collectively pursue a strategy, both individually and then collectively. They've got to have the language that it is important in Europe to have a collective strategy. That language has to be part of what we're talking about now. They cannot continue to be squabbling. That the recipe for Europe of squabbling is a disastrous recession. Disastrous recession.